Progressive balances operating risk with risk of investing and financing activities in order to have a sufficient capital to support all the insurance they can profitably underwrite and service. Risk arises in all operational and functional areas and therefore must be assessed holistically, accounting for the offsetting and compounding effects of the separate sources of risk within Progressive. They use risk management tools to quantify the amount of capital needed, in addition to surplus, to absorb consequences of foreseeable events such as unfavorable loss reserve development, litigation, weather-related catastrophes, and investment market conditions. Their financial policies define their allocation of risk and measure their performance against them. In future opportunities, they meet their financial objectives and policies. They will invest in capital and expanding business operations. Under-leveraged capital will be returned to investors. They expect to earn a return on equity greater than its cost. Presented in this overview I'm about to explain to you are Progressive's operating, investing, and financial policies. Their operating policies monitor pricing and reserve discipline, manage profitability targets and operational performances at their lowest level of production definition. They sustain premiums to surplus ratios at efficient levels and below applicable state regulations for each insurance subsidiary. They ensure loss reserves are adequate and develop with minimal variance. Their investing policies maintain a liquid, diversified, high-quality investment portfolio. They manage on a total return basis, target an allocation of 75% to 100% for fixed income securities with a balance in common equities, and they manage interest rate, credit, prepayments, extensions, and concentration risk. And their financing policy maintains sufficient capital to support insurance operations. They maintain debt below 30% of total capital at book value. They neutralize dilution of equity based on compensation in the year of insurance through share repurchases, and they return under-leveraged capital through share repurchases and a variable dividend program based on annual underwriting results. Progressive has a financial strength and debt ratings and their independent opinions based on comprehensive, quantitative, and qualitative evaluation of the company's balance sheet through strength, operating performance, and business profile. The financial strength rating provides an assessment of the financial strength of an insurance organization and its capacity to meet policyholders' claims and obligations on a timely basis. The debt ratings reflect the company's ability to meet these obligations, to repay interest and principal on outstanding obligations to fixed income investors. Their financial strength on the A&M Best is an A+, on the Fitch is a AA+, the Moody's is a capital A, lowercase a 2, and on the S&P a AA+. And their debt is on the AM Best is a lowercase a, on Fitch it's an A+, on Moody's it's an A1, and on the S&P it's an A+.